Learn from Warren Buffett's investment king in real life. As an investor in King Warren Buffett's investment theory, I read his book and researched his history and the origins of his company. At least I know the secret behind the success of Berkshire Hathaway and the rise in share price from $8 a share in 1960, which today is worth $316,015 per share, that Warren Buffett focused on. Invest in two containers. The word tank is an investment option, which is a popular word in the investment language. The first container is the management of subsidiaries owned by Berkshire Hathaway, and the second container is invested in the stock market, including stocks, bonds, investment funds and more, mostly owned by insurance companies that are subsidiaries of Berkshire Hathaway, such as Geico, General Re and National Indemnity. There are many more subsidiaries of Berkshire Hathaway. When stock prices plummet, Buffett could rely on the money raised by the many subsidiaries he owns and use the money to buy stocks that are being traded at low prices and to hold on to existing stock. Back out. Conversely, if Buffett were to run an investment fund when the stock price plummeted, it would force Buffett to sell the stock to buy any asset that was worth more than its original value. The venture, which has about 70 subsidiaries, ensures stable and efficient cash flow for Buffett, and every day tens of millions of dollars flow through his bank account. In your real life, you may want to have a lot of wealth in the short term, but for Buffett, he has both short-term and long-term sources of income. The short term came from many of his businesses, and the long term came from investing in the stock market and buying shares in major companies such as Microsoft, Facebook, Uber, Coca-Cola and Apple. All in all, Warren Buffett advised, do not put all your eggs in one container. Using the system. Most people think that when they go out of business, they have to spend time every day looking after the business. Obviously, it was like when they were just starting out in business, but if they want to expand their business, they have to use human resources to help, which we call a system for getting things done. The truth is that the young Westerners you see often have the money to travel to almost every country they want to eat and stay in expensive places, while most Cambodians try to earn money from a young age. Old people still have no money to travel like them. You'd think they had retirement money, but not only that, they had a solid source of income for their future. No matter what they were hanging out with or doing, the money would still flow into their bank account. That is, they have their own business management system or they have an investment income. For example, if you are a master builder, you have a monthly salary of $400, which is $4,800 a year. If you keep that money in a bank with an interest rate of 8% per annum, it is still not much, but compared to Warren Buffett, who has a system to replace him, at present he is 88 years old and has a fortune of more than $90 billion. Dividing his wealth by his age, he earns more than $1 billion a year since he was in his mother's womb. Warren Buffett's lesson is that if you want to be rich and fast in the future, you need to start creating as many stable sources of income as possible. The money in the example above, the remaining $4,800 per year to invest to make more money. You can imagine that if you make a steady income of $4,800 a year, this is a lot for the average Cambodian, and you leave it unattended, then 80 years from now you will have only $384,000. One of your lives. It is not a joke. You can see in the real society around you, the rich have many sources of income without having to work hard, while others strive almost to death to earn a living, while some earn a lot every month, but at the end of retirement you run out of income for the rest of your life. So if you care, you should think about your financial future really young, have the strength to build a source of income.